I'm Ross Mayfield, investment strategist at Baird, and we are back for another weekly update with our friends at Strategas. Today, we are lucky enough to be joined by partner and chief market strategist Chris Verrone. Chris, how are you doing this morning?
I'm doing great, Ross. Thanks for having me.
Good to talk to you. I'm going to start with kind of a broad question, but it's the one that we're getting that everyone is talking about. So I want to get your sense of things or what you're watching to assess the question, which is, are we in a bubble? How do we know if we're in a bubble? What signs should we be looking for that we're near the top of a bubble if the answer to the prior question is yes?
Well, God willing, it's a bubble. A lot of wealth is created in bubbles. Listen, I think it's early to kind of assign the bubble phrase to this market advance. I mean, it's only 6 months ago where we had a 20% decline in the S&P. We're up 35 or so off the lows. When you've looked at that historically, believe it or not, what you have tended to get over the next 6 months is more gains. I think if you're on the bubble hunt or on the bubble search, I would actually look to the precious metals market here. You know, what we've seen in gold, frankly, is more bubble-like. Over the last 2 years, gold has doubled. That kind of checks that box. You know, we've seen all the bells and whistles of a blow-off, extreme flows, extreme attitudes. You've seen this chase in the options market. That to us has more bubble-like characteristics than what we've seen with stocks here. I do think this is a split market. There's no question about that. We've seen anything that kind of touches the broader AI story continue to work, while maybe some of the more counter-cyclical parts of the market have stayed on the weaker side of the ledger. But to call it a bubble yet, I think people forget just how potent 99 and early 2000 was.
I think you're right. The blow off top in late 99 was
It
something
was
to
some,
behold.
it was something else, God willing.
Well, and I want to focus on gold because it does display a lot of the symptoms that I think people are looking for in the stock market. You've done some work on gold's,
Mm,
history or the history after a move like we've seen, kind of a parabolic move, and you've looked
yeah.
to that mid 2000s comparison. What should folks who are looking to that historical comp expect from gold maybe over the next couple of months or the next year or two?
Well, I think it's interesting when gold and stocks have moved very aggressively together, and that's what's happened here over the last 6 months. If you look at gold over the last 6 months and stocks over the last 6 months, they're both in the 90th percentile historically of all observations, so very potent moves. Um, I think intuitively you would expect when gold and stocks work together like this, that would ultimately be bad for stocks, that gold is sending some message that something's not right out there. That's actually not what the data says historically. You look at the handful of examples, and the mid 2000s was one of them, where gold and stocks went up a lot together. The next 3 months, the next 6 months was actually bad for gold, better for stocks. So I don't think there's really a message on what could go wrong simply because gold and stocks have gone up together. I do want to focus on that kind of 2005, 2006 period. There was a point in early 2006 where gold got something like 35% above its 200-day moving average, so extremely stretched by any historical standard. You had about a 20-25% correction over the next 5, 6 weeks. And then it was dead money for 6, 7, 8 months into early 2007 before the bull market in gold resumed. I don't think that's a bad playbook here. We've had an incredible move in the yellow metal for the last 2 years. Blow off conditions the last few weeks. We've now had a reversal. I think we're in the throes of some type of a correction here in gold. And at a minimum, probably needs 4, 5, 6 months into early next year to restabilize, build the next base before it can work higher here again.
Yeah, and that's obviously been top of investors' mind. Another place that we've gotten a lot of questions of late is, is this Fed rate cutting cycle, the resumption of the Fed rate cutting cycle, going to spark life from some of the beaten down cyclicals, some of the rate sensitive names that have struggled in this tech led bull market? Now,
Yeah.
the Fed presser was a little more hawkish than I think people wanted it to be. So, what did you see from some of those rate sensitive sectors? Have you seen any sparks of life, or is when you talk about a split market, are they on the wrong side of that split?
Yeah, I mean, they've largely been on the wrong side, and I think this is the big question for us as we kind of evaluate how this market stands into 2026. Do lower rates, do lower gas prices, does everything out there that should be stimulative actually show up as stimulative with the resumption or the resurgence of some of these, very cyclical, whether it's chemicals or small caps or housing or autos. There's been some life in those over the last couple of months, but I wouldn't say it's yet kind of at the level that we would expect given what rates here have done. So that's a very big question for us as we move forward and look out to 26. If you think about the chairman's remark yesterday in terms of was December a done deal for a cut, and I think the language he used was, quote, far from it. I would push back on that. We sit here with the 2-year yield that's been hovering around 350 for weeks and weeks and weeks. I think the market wants more from the Fed here. I think the bond market is giving the Fed an opening to move here in December and frankly beyond. And I think it's important for those cyclical. I think it's important for those cyclical corners of the market that they do just that.
Yeah, it'll be interesting to see the follow through there because we've seen, the Fed funds rate lower doesn't necessarily mean long yields lower. That'll
Mm,
be a big story for 26. So, Chris,
totally.
as always, super insightful. Thank you for the time, and we'll look forward to talking to you again
My
soon.
pleasure. Talk soon.